A study by SEBI has revealed that more than half the IPO shares that have been allotted to investors have been sold within a week's time. In fact, this study is saying that they've sold more than 70% of their shares within a year's time. It's based on the data collected between April 2021 and December 2023. This study has found that investors have been influenced by a return-driven sentiment. So what can we make of this study? Let's discuss this. And to do so, JN Gupta joins us, Managing Director at Stakeholders Empowerment Services. Mr. Gupta, thank you for making the time. Now, if a majority of retail investors, Mr. Gupta, are making short-term gains like listing gains on IPOs, which the study is referring to, why do you think it's problematic for the regulator?
Good evening. First of all, let us understand who are the investors. So you can't say that retail investors are selling. You can say there are various types of retail investors. One who invests for long term, one who invests for short term, and other who invest on the basis of a lottery. Now, if you look at IPOs, because of the demand and supply gap, every IPO gets subscribed by 100 times, 200 times, 50 times, 30 times. So what happens? There has been developed a class of people. Because of SEBI, you don't lose out on interest. So there is a class which only does IPO business. So they will apply in one IPO. If they are lucky, the lottery is released in their favor.
Yes.
They get allotment and they immediately sell after allotment, maybe
Correct.
on the same day or within a week.
Yes.
And then they use this money for applying for the next IPO.
Correct.
So it is a working capital cycle
So it's
for
a certain kind of investor. One gets that, Mr. Gupta. But why is it problematic to be able to control their behavior, which is what this study is perhaps indicating, and also what we're picking up, of course, on SME IPOs. That's a separate matter. I'll come to that in a moment. But why do you think retail investor behavior needs to be looked at as closely as this report is suggesting?
So I say you don't have to do anything to check the behavior, because the reason is very simple. It is the market dynamics. At present, there is a flood of IPOs. So I know that if I apply in this IPO, I didn't get in, I apply in the next, and so on. The moment IPO numbers come down, the behavior will change. The issue is very simply, I feel lost out if I get allotment and I don't sell, then I may not be able to participate in the next. So these things keep on going. And when you see that today the IPO subscription is very high, one of the reason I'm saying, not all, is SEBI. Because earlier what used to happen, I used to lose interest. Today I don't lose interest, and within 2 days allotment happens. So all my savings bank FD, I am using it to apply for IPO.
Right.
That is one reason which is there. And
so basically, you don't think short-term investments have anything intrinsically wrong with them, Mr. Gupta?
I don't think there is anything wrong. That is what I'm again saying.
So isn't, in your opinion, the markets regulator trying to look down upon short-term investments?
No, please understand, you are again imputing motives. Market regulator is only giving you data. I can interpret the data the way I want. You can interpret the data the way you want. Market regulator is only showing you the picture.
But this happens because there has been so many strictures as far as F&O participation is concerned. Whether you talk about, SME IPOs, and there has been that much more interest by retail investors in SME IPOs, all of that put together raises questions on whether the regulator doesn't want retail investors to look at investments that would be short-term in nature. Doesn't that come across?
I will come again. You got to understand what is the role of market regulator. Market regulator's role is development, protection, and regulation. And for everything, what is important is the information in public domain. And a regulator is doing nothing else but telling you this is the position, this is the information. You interpret the way you want. A regulator cannot say there should be no SME IPO. Regulator cannot say that if you get allotment in IPO, you should not sell or you should hold it for 1 month or 2 months. If you recall, even mutual funds have been selling after allotment, except the anchor investor. It
Exactly.
depends upon, because
Yes,
mutual fund is again, they are also millions of investors put together into mutual fund.
exactly.
So the issue is very simple. I, as an investor, have said that this is what is my target. If I meet my target, I sell. Now I'm again warning you. This will change the moment IPO frenzy dies down.
And
If
you
there
think
are
it will?
not 100 IPOs in a year,
You
if
think
there are
it
only
will die
20
down?
IPOs and
This
10
IPO
IPOs,
frenzy,
things will
Mr.
change.
Gupta, Mr. Gupta, you think the IPO frenzy will die down?
No, it will die down when the demand and supply changes.
Right,
See,
okay.
today what is happening? See,
Yes,
one bad IPO, one bad IPO will reduce the frenzy. Because what happens today, it is a situation that whenever I am selling something, I am able to get a price. But what happens when I apply for an IPO where IPO is for X rupee and the listing is not X minus Y
yes,
and I lose money,
yes.
then I will be cautious.
Right,
So
right.
what happens when it is like this? When it is rising market, everybody is intelligent.
Yes, indeed. And the rising markets, everyone is gaining money, so everyone wants to be there and not miss out
Yeah.
and not get FOMO. But this was specifically also about SME IPOs, with market capitalization of SMEs now surging to $2 trillion rupees. SEBI's Ashwini Bhati, he's part of the board of SEBI, and he's emphasizing the need for due diligence. He's cautioning against inflated balance sheets. In fact, joining in the chorus is the managing director of the National Stock Exchange, Ashish Kumar Chauhan. He's taken cognizance of what SEBI is saying and has said that the Market Surveillance Committee has increased its vigilance on this matter. Before I come to you on this, let's just listen into what both of these gentlemen have said.
Too much of SME sort of framework also, SMEs getting too much funding or their prices going up is also bad. And that's what creates apprehensions across, saying there is a runway growth there and we need to be very aware and take actions against. SEBI has also over the weekend made a statement that they are going to come out with new regulations on SME, which will be much tougher.
Maybe the diligence that is required of the chartered accountants, merchant bankers, and exchanges is possibly missing, and they need to do some hard work over there. And analogy can be drawn with a doctor. Please be good doctors to these companies. Don't give them steroids when they can survive on paracetamol. Growth is very much there. We are growing very, very fast, and we do hope that all the intermediaries help to fostering the SME system in the country.
So the idea is to help the growth of the SME sector. Mr. Gupta, you heard what both of them have indicated. But in terms of this kind of IPO frenzy that we are talking about, there have been a lot of SME IPOs. But the real question is this, that if an investor, a retail investor today decides to put in money, park his investments in an SME IPO or any other, should we be restrictive or not? Should the market regulator have a problem with it or not? If the investor in his or her own judgment decides that this is the route, a short-term investment.
I tell you, see what happened, the problem with all of us, we look into absolute and isolated numbers. And we say, oh God, what is happening? But look it in the proper perspective. India is a country of 1.4 billion people. Now, 1.4 billion people, if you say 5% of that is in is there in doing in business on their own, that gives you about 70 million people or more than 70 million. Now, in that case, the number of SME, number of businesses is much higher than compared to any other place. What is happening till now? There was no no avenue for raising money by SME. If you recall, SME stock exchange started about a decade back, but in decade, much more things did not happen. But in last couple of years, since the stock market has also gone up, everything gone up. So why as a SME, I should lose an opportunity if I can raise money? The responsibility, as Mr. Bhaskar said, that what is the mediator in between? The mediator in between is merchant banker,
Yes.
chartered accountant, and exchange.
Right.
Now, all these people are the filters. They should
So
filter
due diligence
out.
should be done by them.
Yeah, so they should always filter out good versus bad.
Yes.
Now, as things have heated up, people are trying to look back, going to the drawing board, that what can be done to remove the unwanted people from coming.
So won't the
Because what
market
happens-
forces come to that point where this due diligence will come in? Or do we need our regulators to step in?
No, I'll tell you. See, again, the idea of SME exchange was that SME was not supposed to be for a small retail investor. That is why originally 50,000 or 1 lakh rupee was the minimum amount was there, now which is 2 lakh rupees. The idea was that it is not for everybody, it is for people who can take a more risk as compared to retail investor. But what has happened over a period of time, the 2 lakh rupees has become what it used to be 15, 20,000 10 years back. That is one point. The second thing is you understand the people have come to market in big way, and that reason is very simple. Earlier, what was the choice of investment? Gold,
Yes.
silver,
Yes.
housing, and fixed deposit or something. Now look at this. The fixed deposit is a 6.5%.
Yes.
And you see companies like Indian Oil or ONGC,
Yes.
their dividend yield is 6.5%.
Correct.
So why somebody will keep fixed deposit in a bank
The divergence
where
is too
here
much,
you go
exactly.
to capital appreciation?
Right.
The cash is gone from the markets. Earlier, what I used to do, I used to invest in cash and get money in cash so that I don't have to pay taxes.
Yes.
Everything has gone. So the limited avenue that is left is stock market and some other thing.
Right.
So everybody is putting money in the stock market.
Correct.
And demand is high, supply is less. So this is bound to happen.
Right.
Unless until you improve supply.
Right.
And as far as the supply is concerned, which we have been debating all the time, all the good companies, promoters are holding to their supply to their chest. Nobody wants to divert below 75%, 50%.
Yes.
So all these factors are keeping the supply in check, which is creating a high demand.
Indeed.
And that is why, but I can't blame
So,
anybody.
in
I
rising
can't
markets,
blame
like you said,
regulator, I
Mr.
can't blame
Gupta,
merchant
we are
banker,
going to
I
have
can't
this
blame
kind of
investor.
situation. Yes, indeed. In these kind of markets, we are going to have this kind of situation. And like you said, demand supply is definitely going to weigh itself out. Can we expect market forces to determine that without being too restrictive for retail investors and telling them exactly where they should park their money and not? That remains the moot question. We will keep tracking it. Mr. Gupta, thank you very much for joining us with your views on this edition of Business at 9.
If you like this video, then like, share and subscribe to ET Now.